everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Oh my, it's a good week to be out of stocks. We got out of the stock market on July 26 when our economic mechanic model indicated weakness in the stock market and a major fall coming. If you missed it, check back a couple episodes here and you'll watch how it developed here. Things were looking real smooth for a while, and then all of a sudden, in the middle of the week, right on Tuesday, things looked real bad as we got sell signals and had damage from the day before, and we've been out of the market ever since. And we'll show you a little chart here in a little while on the damage that's been done on the economic mechanics side. And so we use our economic mechanics model, which is based off of 3 key principles, and then we come up with scores and look where the evidence is suggesting the strengths are and where the weaknesses lie, and we come to conclusions that way. And our first key principle, the US dollar and the commodities, they move in the opposite direction. And number 2, commodities and interest rates move in the same direction. And last, number 3, high interest rates are bearish for stocks. And we begin with the US dollar. And on the daily chart of the US dollar, things have been looking pretty good through all the turmoil we've been having, as down below, 0.1, we got a buy signal on the stochastics in oversold territory as the black line crossed over the red and it's been climbing. Been a little suspect of these stochastics down here though, as the pitch has been a little off, and it looks like now the black line's moving in on the red, so we're gonna have to wait and see this week. But we did give it a green mark as there's no evidence of anything negative at this time, at least on the stochastics. And above that we got 0.2, the MACDs crossed, confirming the stochastics when the black line crossed over the red. And the histogram bars, they're moving up higher too, so we gave this one a green mark. And up top, relative strength index is climbing too, so it's steady. We gave this one a green mark. And on the weekly chart, it's looking real suspect here for sure, down below 0.1. Those stochastics have rounded off and crossed, and it's looking negative. It looks like they got a major decline ahead of them. We gave this one a red mark. And above that, though, point number 2, the MACDs are still green as the black line is over the red and just climbing along there, and histogram bars rose, so we gave this one a green mark. And up top, relative strength index been going sideways, we gave this one a yellow mark. And summing up the US dollar, we analyzed the daily chart and the weekly chart. On the daily chart we found the stochastics, the MACDs, and the relative strength index were all positive, and we gave them a green mark. There's a little suspect on us, we're going to watch it coming into this week though. On the weekly chart, stochastics were negative and we gave them a red mark as they were rounding over with a sell signal. MACDs, they were positive still, so they've yet to confirm the move in the stochastics, gave them a green mark. And the relative strength index was neutral, we gave that one a yellow mark. For a total, we had 1 red mark, 1 yellow mark, and 4 green marks for the US dollar. We're a little suspect, and we also just got downgraded, so we're not sure how this one's going to turn out. Stay tuned to the blog for more information this week on the US dollar as things develop. And now we'll look at the commodities represented by the CRB Index. And on the daily chart of the commodities, down below point number 1, the stochastics are reaching into oversold territory. They look like they're trying to bottom here, but we did give it a red mark until they show some evidence of crossing. And above that, point number 2, we still have confirmation in the move of the stochastics by the MACDs as the black line is still underneath the red line and it's declining. And the histogram bars, the blue bars, are dropping further too, so we gave this one a red mark. Up top, point number 3, relative strength index is still in decline, but it looks like we got a little support there at the 30 line. So we're going to look at this one very closely this week and see if there's any change here, as we just got downgraded and perhaps money will start flowing back into the commodities, but we're going to watch it for evidence. And on the weekly chart, we still have got a problem here down below point number 1, where you got a sell signal and the black line crossed over the red on those stochastics, and they look like they've got a way to go before they can bottom, so we give this one a red mark. And above that, point number 2, the MACDs are still confirming the move in the stochastics, and the histogram bars, the blue bars, dropped a little further again too, so we gave this one a red mark. And up top, relative strength index is still in decline and blew past that 50 line and still dropping, so we gave this one a red mark too. We're going to watch that daily chart though real closely, because the daily chart's going to dictate where this one starts going, whether it continues downward or if it starts turning back. And summing up the commodities, this one was real easy. We analyzed daily chart and weekly chart and found the stochastics, the MACDs, and the relative strength index on both were negative. Gave it all 6 red marks, 0 yellow marks, and 0 green marks. We're going to watch this though very closely, as we just got downgraded, and you know, we could see a turnaround in the dollar here real fast, and of course that would be beneficial to the commodities as they would turn around and start rising. I did write earlier in the week about a potential for a dollar crisis here and seeing new lows that's never been seen before. We'll have to wait and see if that comes to fruition or not, but the evidence is suggesting we could be at the start of a turn here. So again, stay tuned to the blog there on wealthguardshow.com for more this week. And we look now at the 10-year Treasury yield. And the daily chart of the 10-year Treasury yield. Down below, point number 1, the stochastics look like they've bottomed here as the black line crossed over the red in oversold territory. Gave us a bullish signal, and we gave this one a yellow mark. And above that, point number 2, the MACDs is still in decline, but the histogram bars have leveled off here too, so we're going to watch this one closely. We gave this one a yellow mark. And up top, point number 3, we see the relative strength index. Looks like we made a little bottom there, and we're heading a little higher here, so we gave this one a yellow mark too. And on the weekly chart of the 10-year Treasury yield, this starts to get interesting down below point number 1. Looks like we're getting a bullish signal here too as the black line is crossing over the red here on those stochastics in oversold territory. This could be trouble here. If this crosses, this could be very, very bullish for yields, which means Treasury prices are going to drop like a stone. Above that, though, the histogram bars, well, the MACDs are still in decline. The histogram bars, they're also dropping still, so it's still a red mark. And above that, the relative strength index is also still in decline, hasn't settled yet, so we gave this one a red mark. And summing up the 10-year Treasury yield, we analyzed the daily chart and the weekly chart. On the daily chart, the stochastics, the MACDs, and relative strength index were all neutral. We gave them yellow marks, but watch those closely as they were negative and they're starting to turn bullish. And on the weekly chart, we found the stochastics there. They were starting to get a little better too, so we gave them a yellow mark. MACD's relative strength index was still negative. They had to last a turn though, so we gave those red marks. Things are definitely strengthening in the 10-year Treasury yield, and it's no wonder we got downgraded here after the close on Friday. Looks like Treasury yields are going to go higher. And now we look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones Industrial Average, just look at the damage that's occurred so far. And down below, point number 1, the stochastics are deeply oversold, and the black line crossed over the red. I think these things are still going to hang around here, but I give it a very generous yellow mark. You at home, you could turn this one into a red mark for yourself real easily. I don't know that it'll make much difference in the end. Above that, point number 2, the MACDs are still confirming the negative stochastics as they're dropping, and the histogram bars have fell too. And point number 3, up top, relative strength index. It's looking like it's trying to base here a little bit, but not much. This is still a red mark here. As we got to see some evidence above that 30 line before we turn this one yellow. I don't like what I'm seeing here. And on the weekly chart, it just gets worse. Down below, point 1, those stochastics. We see we got that sell signal a couple weeks ago here, and turned negative. We've been dropping ever since. We've got a long way to go on this before we can turn around. Gave it a red mark. Above that, point number 2, we see we got confirmation as those MACDs just are dropping again, and the histogram bars, the blue bars, are falling again too. We gave this one a red mark. Also had very high volume last week too on the downside, so that's not good. Up top, point number 3, the relative strength index has been trending down. It's also dropping lower again too. We gave this one a red mark. Looks like we got a little support here on the blue line, right around 11,500. It's not much support there. May see a small midday bounce or something of that effect, but nothing good here. I honestly think we could fall another 1,000 points here over the next week to 2 weeks on the Dow Jones. And on the Dow Jones Industrial Average, we analyzed daily chart and a weekly chart. Things weren't looking good. Daily chart, stochastics, we found those were neutral. You could easily change that to negative if that's what you thought at home. MACDs were definitely negative. We gave this one a red mark. Relative strength index was negative too. We gave this one a red mark. On the weekly chart, stochastics, MACDs, relative strength index, they look real bad. We gave these red marks too. And for a total, we got 5 red marks, 1 yellow mark, and 0 green marks for the Dow Jones. And again, I think we can fall another 1,000 points, I hate to say this, over the next week to 2 weeks if things don't start turning around real fast on the Dow Jones and some of the evidence turns around here, but I just don't see it at this time. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and the Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by weighing the number of positives against the number of negatives and coming to a conclusion that way. And this week in first place was the US dollar. We had 4 green marks, 1 yellow mark, and 1 red mark. Watch the blog closely for changes in the US dollar and all these other components as well. Coming in second place this week, it was the 10-year Treasury yield. It was looking a little bullish here. We had 0 green marks, but 4 yellow marks and 2 red marks. That's a major improvement over last week, and it looks like things could get stronger on the yields this week. And coming in third place this week, well, it's the Dow Jones Industrial Average. You can cut this any way you want it. We had 0 green marks, 1 yellow mark, and 5 red marks, followed by the CRB Index, which was 0 green marks, 0 yellow marks, and 6 red marks. Watch this one for a change though too, because if the US dollar turns, expect the commodities to change as well, and the commodities look like they could be reaching for a bottom here. And we take a look now at the market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And this week the US dollar came in first place, but it looks like it could be slipping here a bit. But we got that between neutral and bullish right now. And in second place right now in climbing, it's the 10-year Treasury yield. It was in last place, I think, last week, or close to it. It's now starting to turn bullish here, as looks like we're selling off in the Treasuries. And in third place, it's the Dow Jones Industrial Average. It's looking real bearish here, and I think we're going to get hammered a little further. I think it's going to come in last place next week, and I think the CRB Index, which is in fourth place, we could see a turnaround here. It's going to really depend on if we bottom on those stochastics early this week. I called for a bottom on the CRB Index on the blog around Friday or Monday this week, and I think that, you know, Monday, Tuesday, I think it's coming here, the bottom in the CRB Index, especially if the dollar starts to seriously decline. Watch the blog, though, very closely on the wealthguardshow.com website for any changes. We'll just take a look daily at it, and I don't know when I write. Sometimes I write depending on the market conditions. I don't have a set schedule, so check back often. And stay tuned for the IBD 50 portfolio coming up next. When we last left you, we were up nearly 14% when we got out of the market and into cash, and we've been sitting on the sideline ever since. We're still going to get rid of the worst performer, as we do every week, and perhaps replace it with a new stock. I don't know, you'll have to stay tuned for that. You might be surprised at what happened this week. Stay tuned. Now the IBD 50 portfolio. And when we last left you, we had Biogen coming in first place last week, starting out now at $101.87. Walt Energy came in second place last week, starting out at $122.57. And Nu Skin Enterprises came in third place, $37.54, starting out the week. Carbo Ceramics survived the portfolio, starting at $156.07. We got a total gain in the portfolio of almost 14%. We're at 13.82. Total value of $11,382.07. And we've been hanging on in cash right now, so we're not exposed to these stocks that are out there, but one of these stocks, the worst performer, is still going to get eliminated. Let's see how we did. And our number one performer this week, coming in first place, it's Nu Skin Enterprises. And if you can believe it, we missed out on a gain this week, opening up at $37.54 and closing at $39.29. A total gain in the stock of 4.66%. That's impressive this week. I had a total gain of $78.75 in the portfolio had we held on to the stock. Let's take a look at the chart. And on a daily chart of Nu Skin Enterprises, we see down below, point number 1, we're starting to get a sell signal here on those stochastics. It looks like the fun is over and party's over here at the Nu Skin. We're going to get a sell signal on this one soon, but for now we just gave this one a yellow mark. And above that, point number 2, MACDs are falling again, and the histogram bars, they're still rising. We gave this one a yellow mark. Up top, relative strength index. It's looking like it could be bouncing here a little bit, but it's still weak. We gave this one a yellow mark too. They just had earnings come out this week, and things look pretty good, but you know, that's all it was, and I think they're just going to go down with the rest of the market here as they'll fall victim to lower prices. And our number 2 performer this week, coming in second place, it's Biogen. And Biogen started out the week at $101.87 and closed the week at $93.18. We would have lost 8.53% in this stock this week, or $173.80. Let's take a look at the chart. And on the daily chart at Biogen, down below, point number 1, you can see we gave it one of those generous yellow marks as the black line's starting to move into the red on oversold territory. We gave it a yellow mark, but you can give it a red mark at home. I don't think it'll make a difference here either. Number 2, we got the MACDs falling. They're still in decline. The histogram bars are also still dropping, so we gave this one a red mark. And up top, point number 3, the relative strength index is diving. Gave this one a red mark too. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. The first stock up, it's Carbo Ceramics. Carbo Ceramics survived the portfolio last week, came in 4th place, find themselves here in 3rd place this week, battling out for survival, and it's battling it out against Walt Energy. Walt Energy had earnings this week. We'll find out if it made a difference. Coming in 3rd place, and remaining in the portfolio, it's Carbo Ceramics. And Carbo Ceramics opened the week at $156.07 and closed at $134.86. It would have been a loss of 13.59% in this stock, or $296.94. Ouch. Let's take a look at the chart. And on the chart of Carbo Ceramics down below, point 1, those stochastics, they did cross. The black line crossed the red, and they're moving a little higher. They're in oversold territory. I don't know if they're going to improve here. We did give it a yellow mark. Point number 2, the MACDs are still descending, and the histogram bars are dropping too, so we gave it a red mark. And up top, point number 3, the relative strength index is still in decline, and it's below the 30 line, so we gave this one a red mark. And so Walt Energy is out of here. And it wasn't even close, opening the week at $122.57, closing the week at $73.30. Total loss in the stock of 40.2%. Ouch! This is the worst performer we've ever had. Luckily, we didn't take advantage of this one. We would have lost $1,083.94 in this stock on only 22 shares. Ooh-wee! That's a tough one. Let's take a look at the chart. And take a look at this chart. Down below, point 1, those stochastics, they look like they're finally arriving into oversold territory, but they may not be done here either, so we gave this one a red mark. Above that, point number 2, those MACDs have dropped very sharply, and the histogram bars, they're falling like a stone. We gave this one a red mark. Up top, relative strength index, look at that decline. This is easy. We gave this one a red mark. This thing is real bad. I'm glad we didn't have to be in this one. And summing up the results this week, in first place it was Nu Skin Enterprises, surprising us with a big gain of 4.66% in a bad week. That was impressive, but we'll see how we do next week. And the second place here, it's Biogen. We had a loss of 8.53%. And Carbo Ceramics has survived the portfolio. 13.59% loss there, beating out Walt Energy where it wasn't even close, losing 40.2% in that one. We would have had a total loss of $1,475.93 in this portfolio, or 17.15%. Big losses this week had we held on. The economic mechanics lesson works. I'm telling you, it told us to get out of this, and it's working for us, and we're holding on right now to a 14% gain, so things are looking good for us. We're going to wait for further evidence of things to improve. And every week we get a new stock in the portfolio, and well, once again this week, as you could imagine, we're going to stick and hold on to cash. No need to make any changes here until we see evidence of a reversal. It looks like we've got a long way to go here and a lot of uncertainty right out there, so hey, we're just holding on to that 14%er and we'll be happy with that. And so our holdings going into this week, we've got Nu Skin Enterprises in first place, starting out at $39.29, and Biogen coming in second place here at $93.18. And Carbo Ceramics surviving the portfolio again, starting out at $134.86. We've got $11,382.07 in the portfolio. We're locked in cash, total gain of 13.82%. And one of these stocks, worst performer, is still going to get sold next week and eliminated from the portfolio. It's going to be a rough week out there. But you know, these stocks, they've got to perform or else they're out of here.